Hey guys, Mike here. So another little video for you, and we'll talk about something called financial conditions, all right? Because there was a chart I'm going to show you that came out yesterday, and I'll show you why this is, because it really surprises a lot of people because they don't understand, like, one of the main drivers of the market is just liquidity, right? And financial conditions, whether they're tightening and whether they're loosening. And you would think, oh, well, the Fed raised the rates up to here, so they have to be super tight, and they're running their balance sheet off and all that stuff. And yeah, that's the common sense approach, but there's another approach you have to look at. And so I'm going to show that to you. Plus, we'll go through some charts of some sectors that may be finally waking up, some that are just getting crushed and cannot buy a break, and some stocks that are just teetering on the edge. They're going to have probably a massive bounce or continue to just fall off a cliff. And so we'll go through those as well. But when you look, this came out yesterday, and it surprises a lot of people when you see this stuff. But this is Goldman Sachs when it comes to the financial conditions index. And as you can see, it is still loosening, right? It's way down here. And people are surprised, but when you understand this, I mean, I'm not surprised because I give it to the members. It's Monday through Friday, right? And so when it comes to financial conditions, you can see that was 2022, right? When you see this going up, that means that the market's going up. When it's going down, like in 2022, the stock market is in a mess, right? What you've seen since 2023, though, is it's slightly coming up, but really just staying in a range. So it's not decreasing, okay? We'll talk about that in just a minute. Federal Reserve Chicago, you can get this for free. Just go on their website. They report every Wednesday. So when I give it to members, post in the Discord. And you can see right here, the latest one just came out. Index points to looser financial conditions in week ending in March 8th. No surprise. It's always a week behind, by the way. And so when you look at it, there's this nice little chart right here. If the chart is going up right there, that means things are tightening, right? The market's probably going down. And if it's going down, like it's been going for a while, that means they are loosening, which means the market is probably either going up or sideways, but not going down, okay? What is happening? Where is the liquidity coming from? One is the Fed reverse repo program they had, right? Here's when they were trying to get liquidity out of the market by taking money from the banks, right, and then giving them an incentive to do that. And you can see in 2023, and especially going into 2024, the banks are like, nope, we'll put that money somewhere else. Thank you very much. So that is more money going out into the market, whether it be investments in the real estate, wherever it's going. And so you have to remember the Fed put 6 to 7 trillion, or the government and the Fed, out there. But again, the Fed has run hardly anything off their balance sheet when you compare to what they put out there. And so that money's still out there in some shape or form, okay? And so that's why liquidity and financial conditions stay like they are right now. And that's why the market will always go up in that. So make sure you track that from now on in, okay? That's a key thing to make sure you look at. Now, surprisingly, looking at weekly fund flows, get this about once a week, the cyclical sectors had 4.18 billion taken out. Wow, look at what they did with the high yield and investment grade bonds. Like, look at that right there. A whole boatload went in there. And so they're either trying to lock in right now before they believe, the rates are going to go down, and just taking profit on those cyclical stocks that have just ran up huge. Now, before we continue, please hit that like button, guys. Helps people find this video. I really appreciate it. And if you like the content, think about subscribing. And of course, as you can see today, we did have the semis finally take a day off. Again, when NVIDIA's usually red, the rest of them are going to be red and stuff. Intel, for example, I know that one's red because of a report that came out last night showing that the Pentagon is probably going to scrap plans to spend $2.5 billion on a grant, which they were going to be a part of. They get a lot of funding from the government, from what I understand. And of course, these stocks have been up and then, somewhat slowing, right? You got AMD, obviously been selling down for setting a new all-time high, getting a bearish MACD cross on the daily. I think this level is what everybody's looking at right here. And so we'll see if we can finally get a retest of that level. As you can see, there has not been a retest once we broke above it. And then when you look over, obviously EVs got drugged down by Tesla. Again, when you take down the king, the rest of them are definitely going to come with it. And when you look over here, this is where Wells Fargo is shockingly, a price target cut, no surprise, but it go from 200 to 125. That was like, whoa. And it says Tesla struggling to sell cars, even as at lower prices. That's the reason why. And it actually got below 170 today. And the big thing to keep in mind is this trend line. Again, this thing's been going since June of last year. So if that breaks, that's what brings those other levels of 166, 152-ish. Somewhere in that level. That's a lot of the levels other people are talking about right now. So keep that in mind if that breaks. And it's clear to see, even on the daily, the bears are obviously still in charge. I don't see any call sweeps coming in. No huge amount of momentum. You do see bullish divergence on the RSI down there. You can see lower lows on the chart, you look at the RSI down below, you see higher lows, okay? Watch Google, we talked about this one. This one continues to break out today, even as a lot of the stuff was red today or just flat. And so if it can break above that 143.25, this one could continue to all-time highs, assuming the momentum in the market continues as well. And then Shopify, we talked about this one, got the bullish MACD cross right there. Nice move up today, anywhere from 3 to 5% on this one. And again, this one's weird because, and I like seeing when it crosses the zero line. That way I know bulls are back in charge. But again, every once in a while, you'll get this move up and it'll dump right after it crosses that zero line. But most time, once it has a bullish MACD cross, especially the way it's looking right now, you could see this kind of trickle up effect of it. You see right here, kind of what it looks like it's wanting to do right here. And that doesn't look like a big move or anything, but that's something like a 12% move. So, and there's no earnings to try to boost it or anything, no news that we're aware of. And so again, it's a high flyer. You'll see it go up 5% one day, drop 4% the next. So we'll see if this momentum continues in this name right here. And another sector that was on the move today was fintech. Like these tend to like to move together. You saw Lending Club, Affirm, Upstart was green, PayPal, Square, really good days. Obviously PayPal popping up right here. The bulls are trying to take back over in the daily with that MACD coming across the zero line right there. They're trying, right? It filled this gap right there to the penny. That's when it sold off and it's kind of stalled out for the day. So we'll see if this can finally continue because we've kind of seen this movie before, right? And the one thing I found very surprising on this one right here, as I pull up the RSI and the MACD right here, is the fact that if we go to the weekly MACD is still not crossed that zero line, but the last time it came down and then it came back up to cross it, and when you look at it, it looks like it's like 2016, but when we come back over, I think maybe 2020 did. I'm going to zoom in, but look at this. I mean, it's been a long time, right? It came public, 2016 right there? And so when we come back over here, it's shocking to think, one, it's been below that zero line on the weekly for, was that almost 2 full years now, over 2 full years. But again, still hadn't crossed up. If that happens, that is very bullish, actually. When we kind of come back here, you can see 2020, I guess. Yeah, that was, it actually did creep down below on the zero during that crash, and then it came back above it. But besides that, you go up at 2016. So it rarely happens, so watch for that to happen, because that would be extremely bullish, and this is one of those sectors that is just, it still hadn't gotten love like, all these other sectors like semiconductors and some others have. I mean, you go over to Square, the difference is on the weekly, it has crossed the zero. You see what happened when that crossed the zero line? You got a really big move up on this one. And so again, it's another one of those ones where it's rarely been below. 2020 was the last time. Still sitting in that range, of course. And that just shows you, even with the top 2 contenders, how unloved that sector has been. Now, it's starting to watch too is going to be snow down about 33%. Looks like they're trying to get the curl on the MACD here. It's oversold still on the daily. And when we look at this one and pull like a VRVP, which is the volume profile on this thing, you can see where it's at a key level, right? A lot of volume right there, just right below it. This is where it gets most of its volume. Don't say it can't drop even more, but again, I guess like a 9% drop from here down to that level right there, which would be absolutely key. And then, of course, you have this trend line here where you have many bounces coming off this with just a couple of drops below it. So again, this is another one. I believe it's still a Warren Buffett stock right here. So watch that one. BABA still in that range right there, but continues to move up towards that trend line, just like a lot of other Chinese stocks and stuff, which I was telling members about yesterday. And so we'll see if these keep getting love. But that 78 area is key. If it breaks that 78 area and then breaks that trend line, you can definitely see 82, then 88 for sure. And again, the bulls are trying to take back over. The MACD is above the zero line. So we'll see if this one can continue to build momentum as the Chinese stocks seem to start getting some love right now. But we've never been able to sustain it, right? That's the real problem. Watch for earnings. Dollar General, you saw Dollar Tree. They're going to shut down about 970 stores. So they got just crushed after earnings, which drug down Dollar General as well. Dick's Sporting Goods, and you have Canadian Solar. Then afterwards, Adobe, Blink, Ulta Beauty, PagerDuty is going to be one to watch. And then when it comes to economic data, it's going to be a whole boatload, right? We're going to have PPI coming out tomorrow, continuous jobless claims, initial jobless claims. Then you'll have retail sales as well. And so plenty of data for the market to react off of, unlike today where the market, like the SPY, just stayed in this really tight range for many hours today. A couple of liquidity grabs here and there, but nothing too major and stuff. And that was, but it didn't, the Qs were down nicely just because of semis but the S&P had a whole lot more sectors green. That's why it was barely red for the most of the day, and ended up going green at one point in time. So again, we'll also have OPEX on Friday, and so it's going to be a nice, fun 2 days. I expect a lot more volatility tomorrow with this data coming out, of course, especially after the big move yesterday on Tuesday and stuff. When you would think hot CPI means market going down because yields pop. So if PPI comes out, hot and yields pop, I'm not going to predict the market's going down because we saw what happened on Tuesday. And so let me know what you think about that. In the bottom, PPI has been all over the place the last like 6 months. So we'll see if it comes in hot or not. So please hit that like and subscribe button on your way out. I really appreciate it as usual, guys. And I will see you tomorrow, hopefully.